Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is February 19th, 2014. Thank you all for tuning in. Let's jump right into the charts here. What we're going to see is that the futures are dipping a little bit. They're down about 5 points at the moment to around 1832.5 per contract. So a little bit of a slip here. They have come off their worst levels, but nonetheless, trading right around this 1832 level at the moment. So we'll see how this trades out today. I think the market is a bit overbought at the moment. Currently, we've had a real good rally over the past 2 weeks or past 10 trading days. So again, I think that traders now that we've reached those highs in the S&P from January once again, probably have to look for a little bit of sideways action at least in the near term. Before I go any further, I want to just show you why the market's down, and that's because the dollar yen is down. So the dollar yen catching a little bit of a bid right here, but nonetheless, you can see how the dollar yen has really slid all night long. Dollar yen starts lower, futures should be lower as well. So decent little sell-off in the dollar yen today, make no bones about it. That's down 37 cents. When the dollar yen goes lower, it means the Japanese yen is strengthening, and that is a negative for the carry trade that the big institutions are using each and every day to buy S&P 500 futures contracts. So again, watch the dollar yen chart. It will tell you a lot, and we'll keep it on the radar. Now, let's get back to some stocks that are in the news today. First and foremost, it looks like Zales, the jewelers, is being bought out by, I think, for $29 a share. I forget the exact amount. But in any case, if you own Zales, congratulations. Take your money, run. It's a nice pop today. You're trading up to $21. It closed at, I believe, $15 yesterday, $14.91. So great move on Zales. The company that's acquiring Zales is also a parent company of K Jewelers, and this company is Signet Jewelers Limited. So again, this is the acquirer. This stock is up as well. I guess they're consolidating the industry group, but nonetheless, rarely does the acquirer go higher, and that is the case today, though. So a nice little pop on SIG, which is Signet Jewelers. Stock is trading up around $89 a share, closed at $79. If you own this one, I take the money and run as well, but nonetheless, at least try your stop loss. All right, let's get into some other names out here. CF Industries, ag stock. This company reported earnings trading at $233.51 this morning, closed at $226.19. So decent pop higher. I guess it has some upside room here. If it does come down, I do think 223 is still a pretty decent support area. But if it breaks through there, watch out below. It can go much, much lower. But right now, decent pop higher. I don't have any great levels that I like. A little resistance around 239 to 238.50, somewhere in that vicinity. But it's a strong gap higher, so you want to respect it at least in the near term. I'm looking at PNRA Bread. They reported earnings as well today. Again, the stock closed at 173. It's trading at 170.50. I don't know if we can make too much out of it. It did trade yesterday after hours down to 166. A level I would keep on watch today, two levels. Aggressive traders could watch the 164 level. There should be some support there, but a level I really like a lot would be around 157.60. So you want to keep that level on watch as well. So 164, there'll be some support there. If I could ever draw the line in. There we go, close enough. So we put it 164. That's going to be first level. And then there's a real nice solid level around 157.60. So a long way down. But thin stock like this, and PNRA Bread, believe it or not, is a thin stock. It can get down there. So keep this one on the radar today. Another stock that reported earnings yesterday was Herbalife. The stock closed yesterday at $68.93. Today it's trading at $69.50. There's not much we could do with Herbalife here at these levels. If the stock got up to around $78.50, I think you'd probably look at a real decent resistance point for a scalp short. But outside of that, there's really not much. It's really range bound. You could see the big spike yesterday after the closing bell, but it has come back in. So there's not a lot you could do with this one. On the downside, I suppose $59 would be some short-term support, and I also like $53.42 if it got down there. But again, I have no idea if it's going to make those kind of moves. Let's take a look at Mattress Firm. I believe they reported earnings as well. Stock right now is trading at $37 a share. I was working on a gap level for this one. It was actually a little tough to pick a real good gap level. So I'm going to give you a mathematical level instead, $32.97. Watch that level if it gets down there, and believe me, it can get there. This is a very, very thin stock. Does not trade a million shares a day. On average, I guess it trades about 150, 200,000 shares. So I don't see any real strength in this equity till around $32.95, maybe 97 cents. After that, believe it or not, it can go down to around $29.50. So keep those levels on watch for Mattress Firm today. These are some levels that you'd probably have to watch for. Let's take a look at Columbia. Everybody knows Columbia Sportswear, the ski gear maker, and all of that good stuff. Right now, the stock is trading at $84.25 a share, closed at $78.67. This company reported earnings. Now, when I look at the charts here, it's at a new all-time high, so it's very difficult to pick a resistance point. All new all-time highs are very, very tough, but it should stall out around the $85.50 to $86 level. I really have a hard time seeing this stock get much past that level. I'm not going to say to short it simply for the fact that it's very thin and can overshoot. But if you own it, I would start to trail the stop loss around that level. And as you can see in the pre-market, it did get to 85, but I do have a level at around 85.40 to 86. That's where I would really start to get a little bit cautious with the name, as it is a bit stretched now on the charts and the bigger time frames. Let's take a look at oil this morning. Light sweet crude this morning is trading a little bit higher by 60 cents to 102.69. I mean, oil's been on a tear recently. Let's go to the USO chart, which is a good way to trade light sweet crude, and you'll see this is trading at $36.80. So this is a little bit extended, a little bit stretched in my opinion. I think traders now around $37 have to watch for some resistance in here. I don't know if there's a lot more upside today, but the chart is still in an uptrend. It's holding up. It's rebounding real well. Oil is still very, very strong, but watch for some natural resistance around $37. As far as gold goes today, gold is trading a little bit lower, down about $4.40, which it needs. It's just overbought. Gold is actually trading lower with the dollar yen being lower. That's unusual. Normally when the dollar yen will fall, gold will go higher, but I think it's been on such a tear that it kind of needs a pause day or some kind of a pullback. And right now, if you take a look at the GLD is trading at 127.25. It closed at 127.40. So we're going to watch for just a pause day in gold today. I think that's most likely, because you're not seeing a good reaction in gold even with the weaker dollar yen chart. Generally, when the dollar yen is weak, gold will move higher, but gold has had such a big bounce recently that a pullback is actually healthy for the precious metal. So we're going to keep that on watch going forward. Once again, futures are down about 5 points at the moment. Can't make too much out of them. We'll see how this market trades out, but I would not be surprised to see a pullback today of some sort. Remember, options expiration is on Friday, so you do want to be a little bit cautious. There'll be a lot of game playing by the institutions, especially in the popular names and the popular stocks. With that said, everybody, have a great trading day, and we will see you on the charts.